I think so. I mean, you've got to put things in perspective, and the job market has been red hot for 2 years, right? It's beaten expectations every time for the last couple of years, and now we're just cooling off a little bit, but it's still very, very healthy. And I mean, the unemployment rate in the U.S. and the job creation in the U.S. would make Germany and China jealous right now. So let's keep that in mind. I think the Fed is very much about giving guidance and not shocking markets. We've heard at Jackson Hole that they are now ready to start cutting, and I think the best thing for them to do is to start, but not to overdo it. All right? So I'm with the Goldman Sachs economist on this one. I think consecutive cuts of 25 basis points is what they're telegraphing, and I think that's what they'll do.
Okay, so we get this cut next week then, 25 basis points, as you say. What is it going to mean for equity markets? Will it be a green light for higher highs or a sell signal?
So a lot of it depends on the press conference, as always, right? Are they going to say this is the first of many, or this is it, right? So that's what investors are looking for. Investors will ask for more no matter what. They will keep asking for more. They're in that mode now where they expect the central bank to always bail them out. So, as long as they anticipate more, I think that'll put a good floor on markets in the short term.
Also have to ask you about what's happening in China right now. We're seeing stocks tracking at a 5-year low. How concerned should global investors be about China's deflationary risks spilling over to the rest of the world?
I think that's still a big risk, but it's a contained risk. I think it's a big risk for China. I don't think it's a big risk outside of China right now. Of course, a lot depends as well on the results of the U.S. election and how things go there. But for now, China has its own domestic problems. They can't get personal consumption going, and to be honest, they're not really trying. Meanwhile, fixed foreign direct investment and capital spending has slowed down. And the property market is not yet hit bottom. I agree with that. So you've got problems that are going to be very permanent for China in the near term and next year. But I don't think they'll spill over too much in the rest of the global economy.